Broadcasting for the Sports Channel.
Alrighty, well, we had a crazy turnaround Tuesday. There was a lot of market mayhem, especially towards the end of the day. SPY 367 fails. So it was the first red day of December, first red day, which is pretty good. You know, it happens every once in a while. I'm not actually too angry about this red day, mostly because, you know, I like to beat myself up on the green days. How much more could I make than on the red days? Because as you'll see today, there's a lot of stuff that I wouldn't have done differently. There are a few things I would have done differently. So let's kind of learn from that. So today was kind of a shakeout day trading and a bit of unfavorable gaps on the swings like the Roku and stuff like that. But let's get into our trades so we can learn something. Our first trade of the day was on Boeing, and BA Boeing was curling up. It was in the game plan to go long over $220 a share. And today when we saw this nice good igniting green candle and then a big sell-off and then a curl up, it was on our radar to go long because I love this setup. I like to buy right here, and then boom, my stop can just be beneath the low of this wick, which was 213.2. We got a nice good push up, and then look, we've started to form a bull flag. At this point in time, I can't see to the right of what's going to happen, so I go ahead and add to Boeing. That's a typical setup for me, to add right there and get the breakout through highs. That's what I'm imagining when I am adding to that, and then get a momentum lot off right there and then hold the core for my target, which was about 217.70. But Boeing got this quick snap down, and that snap down was so violent it destroyed the option premium, and I had to come out of half the contract that I just added, still holding that original one with the same stop loss, but this definitely triggered the stop loss for this contract. I have different stop losses because I like to remove risk when the probabilities move against me, and I like to add risk when the probabilities are in my favor. We got this nice good push up, and look, we kind of did this little consolidation breakout right about here, and we went sideways, and it's over that same level of 215. I went out, go ahead and add to Boeing again at 215, and immediately, boom, another slam down candle, another stop out on my added lot, still have the original lot at 214, and then we just went sideways, put in a bear flag. As you can see, here's our big move down that creates the flagpole. Then you contain as much of the candles and candle bodies as you can. Boom, we got that nice good flag portion, and the flags usually continue to the downside. And so I had to come out as soon as the bottom of the flag started breaking. That was just underneath right here, 213.84. So that's where I got flat. And Boeing was a very annoying expense trade of minus $188 to start off the day. 2 stop outs, 3 stop outs. Had I stuck with my original stop out of the low of the day, so this goes on into a lesson on tight stops versus loose stops. I had too tight of stops on these ones. The trade ultimately did work out. And if I would have held my original stop loss of the 213.19 just underneath 213, I'd still be in the trade, at least with one lot. But eventually, Boeing put in this nice good, you know, triangle pattern. Look, we're squeezing. This is an ascending triangle because we kind of have a flat top resistance right at that 215 level. 215, the fourth time was the charm. When it goes over, it actually broke out. We were able to catch one long on Boeing right there, and then boom, we nailed pretty much the high right here, 217.70. I was able to Ghetto spread it, and we'll talk about the Ghetto spread in a bit. Our next trade of the day was on Disney, and if you check Disney's daily chart, it's really nearing that all-time high of 153. However, it is struggling a little bit over here, but Disney was gapping up and had a really nice formation. We gapped up, sold off, pitter-pattered for a bit, but then we started to curl up, and we started flagging a little bit. Now, when we make a big tail candle like this, I like to mark it, but I usually like to grab where the candle bodies were, and that lines up right at about over 150. But look at this, nice little bull flag, and right here on this igniting green bar, I went ahead and went long on Disney, one call contract just over 150, and my stop is just beneath, you know, 149.84, you know, 20 cents of risk, not a big deal. Got this nice good push up as we break this resistance right here, and we start to show a hammer candle after a tail candle. That's bullish. That took out all the sellers that thought that hammer candle was going to come back, or tail candle, I should say. So this is the tail candle. This is the hammer candle. And boom, we got this nice good push up. Nice good push up. And I'm targeting past the all-time highs. I was going for a bigger target on Disney than this. I was up, you know, $80, $90, $100 at this point in time. I was thinking about taking it, but I really wanted to get paid on this trade. And I've said, you know what, if it doesn't go, I'll just end up going break even. And I unfortunately had to come out on Disney for break even once we came underneath 150.30 on the second go around. We formed a kind of head and shoulders. Here's your left shoulder. Here's your head. Here's your right shoulder. And then you have the neckline, which is the support. That's right about here. And then boom, we broke through the neckline. I think I was wicked out in this candle. If not, I was definitely out once we broke that support, twice. And so Disney, small little baby, $3 profit, but that's nothing. Our next trade of the day was SPCE, and SPCE, looking back on it, it was a little bit far-fetched and definitely probably not the highest probability trade. But once we formed this kind of little bull flag, I went ahead and got long on SPCE just over 28.33. I remember it was a stubborn level the day prior, and we got just a little bit of follow through. Then boom, big smackdown. I had to come out just underneath 28, so a little bit of an extended buy right there. It was just not the best trade, so that's why it probably didn't work out. There wasn't a massive amount of edge buying up there with a stop beneath 28. However, that's exactly what it looks like. You buy right here, you're up a couple of dollars, but it's not enough to take a partial, because in the long run, if you take your profits too early, you'll get wrecked. So basically, I had to stop out underneath 28 right there, and SVCE was annoying expense trade of $31. Going back to Boeing, I mentioned that I bought a call right here at the breakout area, and then we broke out on high volume, which is really good, and we took our profits, or quote unquote took our profits, by instead shorting the next strike call. So we did this on December 11th. Let's go out to strikes 14, and I went ahead and bought the 222.50 call. As you can see, I bought it for $415. Then Boeing shot up 2 points in the money, so 215 to 217.50, 2.5 points. That's going to get a really good delta. We were up about $100 on that call at that point in time, but since we shorted the 230 call at that exact moment at the highs, when the IV is extremely high, I can remove a lot of the risk. I was able to sell that for $305. What's my total risk? Only $105, but I have $105 in a play that in a trade that will yield me $750 max profit. So what I did was I removed the risk. I removed the risk of the $400 by selling the next strike out for $300, or a few strikes out. So now, if next week on Boeing goes to 230 and it's above 222.50, I'm going to collect $750 off of my only $100 risk now, which my risk before was about $500 to $600. So I greatly reduced my risk by doing that Ghetto spread. It kind of mimics a day trade, but allows you to still ride the stock. I did the same thing with AMD. AMD, I saw a pattern that I knew I should probably scalp, but I also like AMD for the swing trade, and it was right here. We got this nice, good push up, and we went sideways for quite a while, and then we started to break out. Volume started to come in just a little bit. That was enough to give me a nice little confirmation for a scalp. Boom, I buy the 96 strike call on AMD right here, 92.95, just over 93, I believe it was. Got a nice good push up, pull back, and then boom, nice extended push up, higher volume than regular. And right here, I went ahead and shorted or sold the 98 strike call. What that did was it gave me $69, $69 of credit. And so that's removed the risk. At this point, this was worth more than 92. But now, even though AMD is well down from where I entered the position, I'm still up on the position because I shorted the 98 strike call. So what that did is it removed the risk from, $60 needing to pay for this $2 wide spread, 96 by 98. Instead of that, I'm only paying I'm only risking $20, and I'll still make $200 if AMD gets to 96 to 98 by Friday. So that's 1 or 2 more green days and no inside days needed. So in terms of swing trades, I am still swing trading Disney, looking for a break of 153. I am also swinging Starbucks. I even added to it towards the end of the day. We're flagging up here very nicely, and this is also in the game plan, but here's your move up. We've been going sideways for quite a while, even putting in higher lows while we're doing it. So let's see if Starbucks can break out. It needs to take out that 99.33 level, and then I think it can break the all-time highs. and I'll be peeling profits at 100, maybe just before 100, or through 100, 101, 102, 103 on Starbucks. And towards the end of this week, if not this week, still next week, because Starbucks technically is still in a bullish pattern until it's maybe broken beneath, 96. So Starbucks definitely has some room. We are still swinging Google. We actually added a lot to Google. Google, we were able to, buy the 1880 call, sell the 1890 call, and we were able to buy that same debit spread for another week out. So we've got about 2 to 3 weeks, about a month for Google to go up and get to that $1,900 level. If that is the case, $200 comes into $2,000. If Google starts to break down beneath 1775, I'll start reducing my risk on those spreads. We're also swinging Spotify. This is also in the game plan over 280, and so Spotify is doing just fine. Still just needs to pop these highs. There is a chance we get rejected a little bit, but I think this is the next time because we're coming from a higher low pivot. So the breakout should be pretty good on Spotify. We're targeting about the 330 level by the end of this week or by the end of next week, but it may happen in 2 weeks from now. Stocks need time to go up. We are also still swinging Boeing, and we did have to pick up a few small SPY hedges before market close, just because we closed pretty bearishly. We had a crazy sell-off. Look at this. We had this massive run up, massive gap up, and then a nice good triangle pattern all day to break bullish. It broke bullish, and then boom, we have put in a juicy head and shoulders pattern. Here's your left shoulder, here's your head, here's your right shoulder, here's the neckline, also usually the support or the former breakout area, and right underneath 367, that's when I started getting alarmed that the SPY was going to sell off a little bit more. The volume didn't confirm it, but I had a feeling this sell-off could get pretty big. So we started stopping out of our Roku spreads, hedging off our positive delta, and adding negative delta. We went ahead and added SPY put spread right about here, 365, 364 put, and then boom, SPY started to really roll over where we even added some of our hedges once we started to come down over here, and we added one more once we broke down right there on the SPY. So pretty annoying to have to hedge off the SPY, but it is still bullish. It will be at all-time highs and more all-time highs, as we said earlier, but it just may take a little bit more time than we originally thought. So hopefully you learned something new. Hopefully you got some good chart patterns to learn off of. Hopefully you learned a little bit about the Ghetto spreads. That's a great way of kind of day trading, but half day trading, half swing trading. You start with heavy risk, then to reduce your risk, you short call other calls just to limit your upside, but remove your risk. So let me know what you traded today. Did you have a green day or a red day? Today was a nasty red day. It was a red day of about minus $329. So definitely never fun. We were able to pull off 500 yesterday and $2,000 last week. So we're very happy. Red days happen. I'll be angrier on some green days than today. Alrighty, thanks for tuning in. See ya.